Call this meeting to order for the September 11th, 2025 finance meeting. Roll call, please.
Present.
Present.
I did not hear back.
I have not heard from him.
So, all right.
All right. Approval of the agenda for the meeting.
So moved.
I will second it. Favor? Aye.
Aye.
Move forward. Approval of the minutes from the June 12th meeting.
Move that as well.
I will second as well. So we'll move that forward.
Thank you very much. You guys make a good team.
Yes.
Very efficient, very productive. So we have a rather short agenda today. I have Carl Hogan will be online. He'll present the audited financial statements or share his thoughts on the audited financial statements from 23-24. So this is a year ago's financial statements. And he'll do that. Then on September 30th, we'll bring those statements forward for the board's acceptance, and we'll post them online once that's been done.
Okay.
Okay, and the second item is the refinance update. So we have some good news surrounding that. And, you know, I think it all happened a week ago when the jobs report came out. So
Right.
sort of the negative news there.
Yeah, I got the revisions the other day.
Pushing the long-term view, which is really what drives our rates. So we will get started with Carl here. All right, Carl, can you hear us?
Yes, I can hear you.
Excellent.
You hear me?
Okay. I can. So I'm turning it over to you for sort of the audit review. And then when you're done, after any questions, we'll have administration sort of leave the room and allow for discussion at that point. Okay?
Yep, sounds good. Can you see my screen?
Yep.
I'm sharing my screen?
Yes.
Okay. Yeah, first and foremost, I'd like to, number one, apologize that it is September 2025, and I am, presenting the results of the June 30th, 2024 audit. I just don't, the most important thing is that it doesn't reflect bad on Tom and his team. They've done everything that we've requested. I'm sure Tom shared a little bit with you. The transition that happened last year, that was kind of negligent in a way. I'm sure Tom, when we went through our original merger back in April of 2024, a firm acquired another firm with a significant state and local government practice with none of their own. It's created a lot of havoc for me, my clients, the state, and other, stakeholders within the school district. And, I was happy that Witham approached CLA, knowing that they shouldn't have been doing this type of work. We could talk a little bit further after I do my little presentation, but CLA is, the largest state and local government practice in the country, and they are very committed to the practice and would like to, enhance their foothold in, the Philadelphia region. So that's where we stand now. Once we got the CLA, we were able to engage competent personnel that was able to work with Tom and turn this around pretty quickly, and we're going to have that same team for the upcoming audit. So I'm just going to be real quick. The audit's supposed to be historical, but not this historical. But obviously, I'm going to present this here today. I'm going to come to the September 30th board meeting, and once again, in a public forum, kind of reiterate what I just said, just because, number one, I don't want it to reflect badly on management or the board, the untimeliness of this document. So here we go. Independent Auditors Report, June 30th, 2024. The good news is the district continues to trend positively with respect to their financial position. We've gone through a time period here where the district hasn't been able to put themselves in a position where it makes management and the board, even though you may not seem it's easy all the time, in a better position as you move forward in subsequent budgets. But ultimately, what we want to focus on here is The numbers that are presented to us by the business office or the district for the year ended June 30th, 2024 were fairly presented. No significant journal entries. So what was ever presented back for June 30th, 2024, what was reported to the state is being reflected within the audit report here today. Nothing has changed within the audit report. Other management's responsibilities are still the same. Our responsibilities are still the same. Like to just highlight required supplementary information, and we're going to go over a piece of this with the budgetary comparison schedule. But also I'd like to point out the management's discussion and analysis. I know everybody's not an advanced user of the financial statements, so I kind of focus on people that aren't advanced users could focus on this to kind of get like a narrative format of 2023, 2024. What's happened from 2023, 2024 to date, and just kind of gives you the opportunity to kind of segue what's happened in between then and when the issuance of this report. And we'll go over the budgetary comparison schedule again shortly. And then the supplementary information consists of some combining an individual fund financial statements and also the schedule of expenditures of the federal awards. And we'll go over that shortly in terms of your school district expense in excess of $750,000. Now the threshold is $1 million and you'll be well above that. And then we'll have to get a single audit. But once again, the district had an unqualified or unmodified opinion on compliance and internal control related to its federal awards. And we'll have that in the summary in the back. And then we have the final paragraph here basically stating that the audit was performed in accordance with government auditing standards. And then we have the report on summarized comparative information, basically indicating what responsibility that CLA is taking for the comparative information in the audit report. So here's the good news. General fund, same theme as in previous years, a little bit different than in previous years in terms of the local sources. Once again, I think we always talk about that theme of, hey, we want to be conservative with our revenues. Yes, we know that those revenues that are highly volatile associated with earned income taxes, transfer taxes, they could change on a dime in any given year and put the district in a bad position if they're not conservative. The good news is even we continue to see an upward trend in earned income taxes. It's slowing, no doubt about it. It wasn't like it was a couple of years ago, but we continue to see a better than anticipated earned income taxes being received on an annual basis. And the change here is where we kind of saw the transfer taxes, they're kind of falling off, but now we have the earnings on investments. And I'm thinking we're going to see a fall off on that going forward 24, 25, and then 25, 26 as the federal funds rate is reduced. And just with like in other years, your state sources and federal sources are typically within budget. I mean, I know we had some timing issues with the ESSER money, but now that's all gone. I know there's some issues with the state and with increases to basic and special ed funding in the previous year. But for the most part, those monies are spot on in terms of your budget on an annual basis. As we come down to expenditures, as in any given year, you have some ups and some downs. You know, there's things that you anticipate at the beginning of a school year, and a lot of things happen during a school year. But ultimately, what we want to focus on is this number down here, total expenditures, almost within $1 million of the $140 million budget for the year. Once again, I think we've highlighted this in the past, the special programs expenditures. This is one it's hard to get a handle on sometimes. You know, you could develop a budget with your special education program in any given year. And then there's out of district placements, you know, things with the IU that kind of put a wrench in things. So I know Tom has been working on developing and, you know, strategies in terms of kind of tightening that. But overall, that special ed program expenditures is, you know, tightening in terms of the delta between what is budgeted and what is actually spent during the given year. And then down below your support services, the fluctuations there. As we come down, you had some savings with your debt service during the current year as well. And then other financing sources uses. As you can see, you were able to transfer out $3 million more over to the debt service fund to help subsidize or to smooth out future debt service payments. But I think the key to take away here is that $3 million is one-time revenue associated with better than anticipated revenue. So your expenditures are right in line. But, this gives you the ability to put some money away for future debt service expenditures. And we'll kind of talk about the particulars of the debt service fund and the flexibility it gives you in relation to maybe or smoothing out future debt service payments, or, transfer it over to the capital reserve fund if capital projects are needed. So overall, after the $3 million transfer, you had a slight decrease in your fund balance, and you're keeping your fund balance within that 12.5 range, which is within 5% of your next year's expenditure budget as allowed by PDE. The next page down, it's the same information I just presented for the general fund, but in addition, we have your capital projects fund. Your capital projects fund, the actual bond monies have kind of winded down, and now you just have some capital reserve money that's been put aside. But your debt service fund over here on the right-hand side is, monies that you've been able to put away related to better than anticipated revenues over expenditures within the general fund over the past couple of years. And I think we talked about this before. Every school district has, capital needs, and you could reserve those funds within the general fund, or commit those funds within the general fund, or you could transfer them over to the capital reserve fund. But once you transfer monies over to the capital reserve fund, the state does not allow you to transfer them out of the capital reserve fund. So Tom came up with the strategy with the board in the past. Hey, let's put the money over in the debt service fund. We could always use those money to smooth out future budgets when we need it. In addition, you're allowed to transfer money over from the debt service fund to the capital projects fund. So I think it was a good strategy where you're getting the money out of the general fund, but at the same time, it gives you the flexibility to, number one, use it for debt service, or to use it for other needs, other one-time expenditures such as capital projects. There's where the school district lies, where it stands with its general fund, its capital projects fund, and debt service fund. And, more good news for the board as it allows it more flexibility as it goes into future budgets. Here is the balance sheet, governmental funds. This is just your current assets over your current liabilities. I know there's a lot of information in this audit report that looks at the non-current liabilities and assets, but when you're developing your budget on an annual basis, this is what you want to focus on. What's our current assets? What's our current liabilities? What's the excess over the two that we can use to further to incorporate into future budgets? So obviously the biggest asset of the district is its cash and investments. Most of the investments are in liquid form in terms of PISDLAF. They could easily be turned into cash to be used. And then the other biggest asset that you have here are your taxes receivable and your amounts due from other governments. Primarily, most of the stuff due from other governments is from PDE for reimbursement amounts. So a lot of the liabilities that we're seeing down below will be reimbursed with that amount due from other governments. So they kind of offset each other. The biggest being the PSERS quarterly payment that is paid in September of every year. So you get the reimbursement from the state that's receivable, and then the payable on the other side. As we come down and we look at your liabilities, your accounts payable, you always have accounts payable. There's always bills that come in after year end, and that has remained consistent year over year. There's goods and services that the district receives in May and June, but they don't receive the bills until July and August. We have to accrue those amounts back. And the other biggest liability of the school district is their accrued salaries and benefits. So if you think about it, the teachers work through June 30th, but they get paid through August. They're earning retirement benefits through June 30th, and that's what that represents. So that represents anything that was earned and paid out through July and August, and in the case of the PSERS payment, September. So it's a little bit of a number, but we want to capture what was earned as of June 30th in the June 30th, 2024 financial statements. So as July and August go on, that liability is reduced with the cash position you have on hand as of June 30th. As we come down below, the fund balances, we have that breakdown that we were just talking about on the previous page. Assets over liabilities in the general fund, there's that $12 million, of which $10.1 million is unassigned, and that's within the 8% like we talked about. But also you have that $2.5 million employer retirement rate stabilization. That's been holding steady. The board hasn't done anything with it recently. So, you know, you have some flexibility there. The rate has remained constant. It has kind of ticked down a little bit. You don't know what the future is going to hold if you need it, et cetera. It's good to have it in your back pocket in case the rates do start to go up a little bit. But that's always been put there just in case there was another spike within the PSERS rate, and then you could smooth out any kind of increase in your future budgets. Capital Projects Fund, just like it's said, it's $2 million that's restricted in the Capital Reserve Fund. And then the Debt Service Fund, that's committed to, at this point, it's committed to debt service and can be uncommitted by the board for other one-time purposes, such as capital in the future. I'm not going to go through all the food service statements, but what I do want to point out is good thing with COVID is it has allowed a lot of my school districts to reset with their food service fund. I think Centennial's always done a pretty good job even before COVID. But it's allowed, the school district to accumulate a positive net position within its food service fund just because of all the incentives that were related to COVID and the extra monies that were received by the food service fund. So once again, during the current year, we had a positive change in net position of almost $778,000. That being said, I don't know if Tom's heard or the food service department's heard, the state will, kind of be like, hey, you have too much net position or too much fund balance. So that might be something Tom and his team need to work with the food service department to see, what, can these monies or excess, what the state would consider excess fund balance net position. A lot of times they could be allocated towards capital food service projects. And then finally, just to talk about, I talked about, this is the final results of the audit. So number one, what kind of audit report we had? We had a clean audit report. What's the financial position of the district, which the district is in good financial position, has been improving over the past couple of years. And then also the auditor results. And just like in previous years, the business office, the different departments within the we not only work with the business office, but we also have to work with the special education department. We also have to work with the federal programs department, and they do a good job in terms of doing what they need to do to, number one, incorporate proper internal controls. And when you have proper internal controls, you don't have any findings related to any compliance requirements. So the case this year, our major programs were Title I and the special education cluster. So what's going to happen now, it seems like your Title I's ticking up again. Now that this ESSER funding's off, you're probably going to be on a rotation with your federal awards every year in terms of we'll test Title I, special education cluster, and then your child nutrition cluster on an annual basis, and we'll kind of rotate that on a 3-year basis. Everything kind of got thrown off a little bit with ESSER, and when ESSER came on board, they considered it high risk, and we had to audit it. So it was a little tricky there for a while, but we should get back on track in terms of being on a normal rotation with your federal awards. Title I fell off for a little bit, but it did tick back over the 750, the current year appropriation for the current year. And that is all that I currently have. Just important, I think, Tom, even though it is just September, important that I get here, communicate with the board, the results of the audit, and then obviously to the public as well. And we have already started, Tom's already spoken to the new team here about, getting a more aggressive timeline to get this June 30th, 2025 audit done, which I think will happen given, the person that worked with Tom to get the audit done pretty quickly once we transferred over here. So, that's all I have.
Okay. Are there any questions?
Though, I see that $750,000 threshold between program A and B. What is the A and B?
So when we're doing so that number is going to change to $1 million for your next audit. So A and B. So if you expend over $750,000 in a particular federal award, so during the current year, your Title I program, your child nutrition program, your special education cluster program, and your IDEA program all spend over 750,000. They're all considered A programs. So then we go through our risk assessment and then our major program determination. And during the past couple of years, we've audited ESSER, Child Nutrition Cluster Program, and IDEA. And we haven't audited Title I. The rule is within the most recent 2 audit periods. So they were considered A programs. Everything under 750 is considered a B program. And we only test the B program if the federal government, number one, tells us to, or we determine ourselves that we consider it high risk. And your Title II program, I mean, your B programs are like Title II, and they're really small. So it would be a really rare instance in which we would audit a B program.
It really just determines, as Carl's saying, that the level of review that they do against those, right?
Okay.
That's correct, yep.
All right.
Any other questions, Mr. Hartline?
No, I mean, clean audit, looks great.
Good.
Appreciate the hard work.
Okay,
I mean,
then
it's,
I'm gonna ask Joey to pause the recording. We'll leave Carl on and we'll leave the room, and the two of you can speak with Carl
okay,
at that time, okay?
sounds good.
All right, Carl, thank you very much. We'll let you.
Yep, and I'll see you guys in a couple weeks.
All right, thank
see
you.
ya.
Okay, see you.
All right, Joey, you good?
Good.
Looking for a heads up from the audio team.
Back on? Okay. All right, so we'll resume the rest of our agenda with discussion on the refinancing. So when we met in June, our May meeting, May 15th, PFM Garrett Moore was here, shared with us a plan regarding the 2017 A, B, and D bonds and refinancing them similar as to what we did with the 2016 bonds and push the money back in, trying to reduce our overall debt service. In June, Bill Benzing, it should be easier to remember. Bill Benzing from Eckert came out and presented us the resolution and authorization to issue the bonds that was approved by the board at our last meeting in June. And we had a timeline that would have taken us through August with a sale in the middle of August. Not much happened on an interest rate scale during that time. And that, in connection with the delay in our audit, sort of slowed our process down a little bit, where rates weren't really moving. The Fed wasn't meeting, the Fed wasn't adjusting the rates. And while the Fed adjustments impact us probably more personally than any other way, right, on the short-term rates, they do influence our banking rates, but they don't have as much impact to a bond transaction. But the news last Friday with regarding the labor market and the revisions that are being done, that has a little bit more long-term impact, and the markets dropped down a little bit because of that. We initially anticipated savings of $625,000 that we would then spin back into our debt service. That number is now just under $900,000, which is an increase of over 40%, which is good. And if I was betting, I think it'll be a little better than that as we go forward. So the new timeline has a ratings call with Moody's next Tuesday, the 16th, that I'll participate in, and then a due diligence call either the 17th or 18th of next week to just make sure that the bank, PFM, Eckert Siemens, all are on the same page. Our solicitor participates in that to make sure our documents are in order and everything is good to go. and we'd anticipate a sale around October 2nd, which is sort of that last week in September into October is the current timeline that we have. Okay?
And then we're looking at the next one after that, sometime February, March.
Yes, yep, so there's then a smaller one again, right? This isn't nearly the size of the one of the 2016, but we have another bite at the apple, I think, as you usually say,
Right.
that will get us, another little bit of savings, okay?
Okay.
So in the end, we could potentially look at close to $1 million in
Yes,
company.
yep.
Million or
Yep,
more.
I think the second one was, 100, couple
Yeah.
100,000, right? So the boost in this one is fairly significant, a 40% jump. So I think that's better lucky than good sometimes, right? And good to get that refinancing taken care of. Okay?
And then this is the last one for several years.
Yes.
Yeah.
Yes.
Okay.
Any questions on the audited numbers that were useful? I think when I went back to our budget for the 24-25 year, right, which would have included in our year, that current year number, right, we had anticipated a surplus of 2.4, so we were a little better on that surplus. That doesn't account for a $900,000 IU bill that we got the following year that we're going to push into the 24-25 numbers.
Okay.
So that then we're clear moving forward.
Right.
I think I included, or Dr. Luca included, an update on that last week, right? And I think the savings is like $2.8 million, something short of $100,000 difference from what we had anticipated when we closed out the books and worked through that budget that we'll be getting this year from the IU as they unraveling that delay methodology.
I'm still trying to catch up here.
Yes.
I didn't quite read
Between
that
the
part
jet
yet.
lag and the numbers, right, So, all right.
All right.
Any questions with those?
Nope.
I'd like to give a shout out to Vera on the audit, though. She really did a spectacular job. It felt like a revolving door at times, right? Vera would send it, we'd think we're moving forward, and we'd take 2 steps, and something would change, and she'd be meeting with someone else, and we'd take 2 steps backwards. Did you send this? We've already sent it, but I can send it again. I've already sent it, but I can send it again. And then when we finally got to CLA and working with Heather there, I think it was really, it took off. I think we finished it we finished the work probably in 3 weeks. But it does change the cycle, as I shared with my wife, right? In my world, everything has a season, right? And there's a budget season. When that gets extended, that spins us a little bit later, right? The audit should have been done. When that gets done, and it doesn't get done, you're cramped up again. But it's good to be moving on. I worked with CLA in a prior lifetime, and I found them to be incredibly responsive and very bright and very complete. I think they have good teams that they send out, and I think that was our challenge at Witham when BBD went to Witham. I don't think they were prepared or staffed appropriately or trained appropriately to deal with government entities.
Well, we clearly have a good person in Carl Hogan.
Yep. Carl's a sharp guy.
Yeah,
Carl's a sharp guy and does good work.
Yeah, and we've worked with him for a while, so.
We have.
Yeah.
And it was nice to have the new view, quite honestly, right? As you get into a routine, it's good. And when you change them, it's always a good opportunity for us to rethink what we're looking at and how we're doing things. So I really appreciated Heather's insight and really the questions that Carl already knew the answers to, but forcing us to go back through them is always a good exercise for the team.
the new switch over to the new software and everything is
It's
still going?
It's good.
It's good.
I think for the business office and HR, right, which is was the first to move. I think the Skyward cumulative implementation was really good for some areas. I think payroll is an exceptionally better module than Skyward SMS was. Skyward SMS, as I would, we'd share, right? It was literally like going back to when I got out of school in 80s, right? You're looking at screens that are miniaturized because they're structurally set that way, right? There is no flexibility to it. It was brutal, and you had to go in and out of different systems. So it was great to say goodbye to that. It took a little time to gain our footing, but I think that's going well. I think the challenge on the business side is some of their financial reporting, and that has been a challenge for going on 9 months with regards to debits and credits, right? Something as simple as a debit and a credit, and I like to see debits with minus signs and credits and minus signs and debits positive numbers, right? And that's how it all balances. And for some reason, it doesn't in cumulative, just in the GL reporting. Everything else, trial balance, the math works, but the report doesn't. And we have been on them since December trying to get that resolved. I think the latest spin out came out a week ago. I haven't had a chance to go back and test it, but we've been sort of working around that. Other than that, it's been
really
good.
just a software glitch that is in this.
Yeah, it's a reporting, it's sort of an oddity, right? It's a reporting issue. And, I remember last December, I'm printing a report and I think the numbers are wrong. And I run over to Veer and I come back and we look at this. I'm like, I thought you made this entry. No, you did. And it did. It just didn't report it right? So we looked at it. You could see the issue. It was frustrating to get that done. On the student side, that rollout went fairly well. I think is moving along a little easier than we had on the business side. But there's a lot of components to the business side. Not that there isn't on the student side, but it's sort of one topic as opposed to AP and GL and all HR and payroll that you deal with on the other side.
Good.
Okay.
All right.
Any other questions?
Nope.
We don't have anything for the board to approve at our September meeting, with the exception of the audited statements, and as Carl said, he'll be here for that. And we'll have on the informational side, we'll have the PISLAF regular monthly reports included, which are attached to this committee agenda.
And they were out on last week too for the board meeting.
Yep.
So
Yep.
not going to be a significant difference.
Okay.
All right.
All righty.
Anything for the good of the order?
Nothing else to complain about.
All right. Next meeting is
The next meeting is
October 15th.
Is it the 16th?
October 16th.
Seems like the 16th.
Same time, same boardroom. Motion to adjourn.
So moved.
All righty. Thank you all for your time.
Thank you very much.
Appreciate it.